All right, let's dive right in. We're tackling a really critical question for anyone looking at an EB-5 visa. How exactly are you going to finance that investment? We're going to break down the huge choice between a secured and an unsecured loan, because that one decision, it could literally make or break your entire application.
Just think about it for a second. You're right there, on the verge of funding your American dream through the EB-5 program. I mean, the stakes are incredibly high, and yet one single choice about how you get that money could put the whole thing in jeopardy. And that's because the way your loan is structured, well, it's not just a little financial detail. No, it's a huge piece of your immigration strategy. If you get this part wrong, you could be looking at some serious delays or even worse, an outright denial.
Okay, so let's get into our first section. Why does your loan choice matter so much to the folks at United States Citizenship and Immigration Services, USCIS? You see, USCIS looks at everything with a magnifying glass. And why wouldn't they? Their job is to make absolutely sure that your investment funds are legit and didn't come from any shady sources. This means the kind of loan you pick has a direct impact on how much evidence you have to show them, your risk of getting that dreaded request for more evidence, and ultimately, your chances of getting approved. You've got to remember the burden of proof is 100% on you, and how you got those funds is a massive piece of that puzzle.
So that brings us to the first path you can take to fund your investment. Let's talk about the secured loan. So what exactly is a secured loan in this context? Well, it's pretty straightforward. It's a loan that's backed by collateral. Think about things like property or other really valuable assets that you own. That collateral acts like a safety net for the lender, which of course really lowers their risk.
And hey, because the lender's risk is way lower, you usually get some nice perks like better interest rates and more favorable terms. From the perspective of USCIS, this also adds a layer of transparency that they really like to see. It boosts your credibility. But, and this is a big but, you have to be able to prove that the collateral itself was also lawfully obtained.
Now let's flip the coin and look at the alternative. Section 3 is all about path number 2, the unsecured loan. An unsecured loan? It's the total opposite. There is zero collateral. The lender is basically taking a leap of faith, banking entirely on your good name, your creditworthiness, and your promise that you're going to pay it back. Now, as you can probably guess, this changes the game. You're almost certainly going to see higher interest rates. And frankly, it's just plain harder to get these kinds of loans for the huge sums of money needed for an EB-5 investment. So when it comes to your application, what's absolutely essential? Providing rock-solid documentation of that loan agreement and crystal clear proof that you, personally, are on the hook for paying it back.
All right, it's time for the main event. Let's put these two loan types right up against each other in a head-to-head face-off and see how they really compare. Okay, so in one corner, we have the secured loan, backed by your hard-earned assets. And in the other corner, the unsecured loan, backed by nothing but your good credit. Let's really break down what this means for you point by point. This chart really lays it all out. First up, collateral. It's a simple yes for secured and a no for unsecured. Easy enough. Next, interest rates. They're almost always lower for secured loans because, hey, less risk for the lender. What about availability? Well, secured loans are just way more common for the kind of money we're talking about with EB-5. Now, here's a big one. USCIS scrutiny. For secured loans, they're laser-focused on the legal source of your collateral. For unsecured, it's all about proving you can actually repay the loan. And finally, your personal risk. With a secured loan, you could lose that specific asset. With your unsecured loan, it's more about your overall personal financial liability.
And I really want to hammer this point home, because it doesn't matter which option you choose. USCIS absolutely demands that your investment be genuinely at risk. What does that mean? It means you, the investor, have to be the one who could potentially lose money. You can't be shielded from the financial risk of the project, no matter which loan you go with. Okay, so we've laid out all the facts. Now let's get personal. Section 5 is all about helping you figure out which path is the right one for you. Let's start with the most direct question there is. Do you have valuable assets, something like a property, that you can actually put up as collateral for a loan? If your answer to that is yes, then a secured loan is very often going to be your best bet. It's the path that unlocks those lower interest rates and better terms we keep talking about, which just makes it a smarter financial move. But hey, what if you don't have a big asset you can use for collateral? Then this next question is for you. Do you have a really strong credit profile, a solid financial history? If that sounds more like your situation, then an unsecured loan is totally a workable option. The absolute key here, though, is being ready to meticulously document a clear, convincing repayment plan that will satisfy USCIS.
And finally, we get to the most personal question of all. It really comes down to this. What is your own personal tolerance for risk?
Let's make this super concrete so there's no confusion. With a secured loan, the risk is very specific. You could lose that one asset you pledged, your house, your land, whatever it is. With an unsecured loan, the risk is a bit broader. It's about your personal financial liability. It could hurt your overall financial standing, but they aren't coming to seize one particular thing you pledged. So what's the bottom line here? It's that there is no single best choice for everybody. It just doesn't exist. Secured loans, they're cheaper, but they depend on you having verifiable collateral. Unsecured loans, they give you flexibility, but you're going to pay for it with higher costs and a lot more scrutiny. The right choice really, truly depends on your specific financial situation and what level of risk you're personally comfortable with. So we'll leave you with this final thought. An EB-5 investment is absolutely life-changing. So the question you have to ask yourself is your financing strategy smart enough and strong enough to protect that investment and see it all the way through to success?